Guys, what's going on? It's Kane here, or Wiser Dividends. Today I'm going to be going over my portfolio using the Dividendolgy investment dashboard that I have. When we first look at it, I have a portfolio value of $14,500. It cost me about $14,492, so I have a 0.15% gain. The market's been in a slump right now, so that's why it's not doing as well. The main index I follow is the S&P 500, and that has not been faring real well so far. This is not the actual cost of my portfolio. That's 6.47 or 6.45% gain with the $900, including dividends. I have much more than that, including my realized gains. It's at least 2,500, if not more. When we go over to my stocks, we can see that I have a portfolio yield of 3%. My dividend income is $430, and I have a market value of, again, $14,500. I do have a little bit in crypto. It's only about like $100 or $200. My cash, I'm extremely liquid. I spend it all on investments. I know that's not the best thing, so I got to save up more money. When we go and look at my portfolio, we can see that the main holding is AVGO, ticker symbol AVGO, or Broadcom, whatever you want to call it. That's 12.6% of my portfolio right now. Then Berkshire Hathaway, ticker symbol BRKB. That, and then we have Altria at 8.6%, Microsoft at 9.3, and then Vanguard Growth S&P 500 ETF at 6.8%. When we go over and look at my total wins and loss amount, I will zoom out real quick. We can see that I have roughly about $1,100 in wins. And then due to the losses I've been accumulating recently, some of which were from bad investments that I will get into, and others were just from the market going down. I'm almost at zero in profit right now. When we look at my growth per share, per holding, we can see that I have a 3% gain on Apple. I have a 34% gain on AbbVie. I have a 24.6% gain on AVGO, Broadcom. I have a 24% gain on Chevron. And then I have a 23% gain on Energy Transfer with a little loss in EQT of 19%. And then a big one in Invesco at 42.5%. Most of my holdings per stock allocation are in technology at 26.5%. And then we go over to consumer defense at 17.6%. Then we go to financial at 15.8%. And then we have a mix between energy and insurance, and then consumer cyclical, and then industrials, real estate, consumer services, and then we finish it off with healthcare. When we go and look at my allocation, we can see that I'm almost 100% stocks with only 0.7% cash. I'm holding right now about $180, but in cash that I can invest right now, it's only about 100. My total holdings are at 49. I really want to get that down because a lot of these holdings, as you can see, are all just so minuscule, like $25 and then like 18. Like they're all junk. When we go and look at my future portfolio outlook, right now I'm looking at $600 in dividends per year 5 years from now. Then I'm looking at $2,600 in total dividend income with a portfolio value of $20,600. This is if I do not put any single extra dollar in. My 30-year outlook is at $3,300 with 43,000 and then 112. Sorry. When we go and look at my future portfolio outlook with dividends reinvested, we can see that my yearly dividends are at 700, and then it jumps up to 2,800 in yearly income, and then I have a portfolio value of almost $24,000. It's a pretty stark difference when you compare the two just from reinvesting dividends. And then the 30 years really where it starts to massively compound. I will be receiving over $8,000 in yearly dividends with $80,000 in total dividend income and a portfolio value of almost $300,000 sitting right under at 274. When we go and look at my dividend dashboard, we can see that my expected yearly dividend income at this moment is once again $434. My all-time dividend income is not 15 cents. It's a lot more. It's roughly about $800 to $900. My average monthly dividend is roughly $36.20, giving me a 3% yield. Consumer defense makes up the majority of my dividends, mainly being Altria, as you can see right here, and the dividend income by stock at $113. We then go over to real estate, being realty income, and then financial being what's that? That'll be a mix between I believe SCHD and then SPHD right there. And then we got energy being energy transfer. So now when we go and look over at my dividend yield on cost, we see I have a 0.5% dividend yield for Apple, a 3.4% for AbbVie, and then it's pretty low for uh, Bivy and multiple other shares that don't pay anything. What is a little misconstrued though with this is when we go over to AutoZone, ticker symbol AZO, they do technically pay out a dividend yield. It's just in the form of share buybacks, being, I believe, 5% or 6% a year, which I would much rather have in the long term because, as it's shown, their share prices increased much, much, much more than dividend paying companies have been paying out dividends. And then my dividend income by industry, you can see consumer defense took up the majority of it. And then with real estate, and then financial, and then energy, Avgo Broadcom being one of the largest at $40.2 per year, Altria at 113, Realty Income at 29, and then SCHD and SPHD ETFs. When we look at my 2022 dividend calendar, we see that I collected $45 in dividends from Altria, $17 from Avgo, 86 from USOI, 58 from SLVO, 26 from SPHD, 99 from QILD, and then 13.75 from Verizon. And then we have a mix of other shares being Waste Management, Coca-Cola, Occidental Petroleum, JEPI, and then a lot of other smaller ones under $5. The main income coming from this portfolio comes from USOI, SLVO, and QILD. That's why the income every single month is so high, which is when we go over to 2023, we can see the numbers starkly drop a lot because those three ETFs or those three holdings are no longer there. But it is partially supplemented with Altria and then Avgo increasing in dividend payments and additional shares that I bought. And then Realty Income holding $18 along with Verizon now at 18, and I only have three dividend payments in, so I will still be collecting one more. That will be at least $7. And then Energy Transfer has been slowly growing, so next quarter will be close to $5. And then when we go to Coca-Cola, we can see it's at $15, going up by over 7 from additional quarters. And then we go over to McDonald's at $2.55. JEPI I no longer have, but they were paying me $3. I will be making a video about an ETF that's really close to JEPI. It's called JEPY or JEPI, whatever you want to call it. But instead of doing what JEPI does with the with the premiums that it gets and the income, JEPY gets it from option premiums and cover calls. So I'll be doing a video on that, explaining what all that is. Then when we go to the daily dividend calendar, We can see that for the year of 2022, that I got a big payment in January of $22 and then not too much afterwards. February started out nice at 12 and then was pretty low after that. March was nice towards the end of the month, and then April started out well and then ended really well on the 26th. May was pretty low altogether except on the 26th once again. And then we go to June at $8.60 with a good payment at the beginning, and then the last 5 days of the month really paid. August and July were okay months. The end of the months I preferred more. September was not an entirely good month aside from the last 3 days. As you can see, the 26th is a massive day for pay when it comes to my dividend portfolio. And then there's a whole lot of empty days. A lot of these are just from the weekend, but a lot of them pay on the same day, which is why I have all these massive payments. And then when we go to 2023, we can see that I still haven't reached my highest day as I did in 2022. I will be reaching that towards the end of the year. It all just depends on how my shares get reinvested and just all the magic that goes on with compound interest and dividends increasing in payments each quarter. As you can see, January was a great month to start off with, but then the second half of the month didn't do too well. If you look at everything from the 16th all the way to the 31st, so far I really haven't gotten any paydays. Everything has always been from the 1st to the 15th, mainly being in this section from the 7th to the 15th, with these big payments on the 10th coming in, and then a lot of payments almost every single month happening on the 15th, giving some extra income. When we go over to my stocks, we can see that I have a market gain of almost nothing with my yearly dividend income at $400 and a market value of $14,500. You can see the share price that I purchased all these shares at on average, and then how many shares I have in each one. And then as we go over here, we have the Sparkline Google Finance tool that shows us our 1 year trend, and then the dividend and the dividend yield. What I really like is that it just tells you everything that you have, but I don't like how it's not giving me the total returns. So I'll have to fix that. As we go down, we see I have a lot of shares, but there's so many ones and just fractional shares in this portfolio, and I really got to get rid of them. When we go over to my sold positions, we can see I haven't inputted many, but Tesla and Plug were some of my largest ones, giving me a 31% gain on this $2,900 that I invested. When we look at my stock watch list, we can see that I have Apple, Tesla, Broadcom, Microsoft, Google, American Tower Corporations, and then CRISPR Technology and Eli Lilly. I think all these companies are great fundamentally, and I really believe in Eli Lilly and CRISPR for the future products that they have, especially with Eli Lilly's weight loss drug. I'll be looking into more of JetY for the premium income that'll be like giving out, if you know what I mean. And then IMAX, the Tesla option income strategy, ticker symbol TSLY, and their 55% dividend yield. And then when we look at my portfolio value, we can see that it started out at $7,500 in February of 2021. It dropped down to $6,000 and stayed there for a couple months. And then it slowly rebounded, going up to $8,000 in July. And then it flatlined for about 6 more months. And then we finally started to see some more growth from it. And then we are at this current point right now of $15,000. Well, I guess 14,400. It's screwed up. Yeah. But there it goes. $14,700. Then when we look at my dividend portfolio projections, we can see I have a $14,700 portfolio. And if I don't add anything else, and I get a 7% growth rate with a 7% dividend growth rate and 3% starting payout per share. My dividend payouts per share go from $2.25 with 147 shares all the way up to $1.90 with a $761 share price, and it goes all the way up to 361 total shares dripped, each equaling $700. The monthly dividend payout with drip or no drip goes from 280 to 686. My total income dripped is 80,000. Without drip, it's 43,000. With no drip, my value is 112,000. And then with drip, it goes up to 275,000. I don't use the cost of living or the live off a dividend analysis. If you want me to, say something in the comments and then I'll make a video about it. Just to finish out this video, some good things to look at are these notes once more. For my current portfolio right now, I should have about $2,200 in cash that I should slowly be buying more shares in, but I have next to nothing. I should sell out of positions that don't align with my long term goals, which is about like a third of these, 49. I need to get my holdings down anyways, and I definitely need to keep my cash above. That's why it's stated twice. And then increase allocations into ETFs and index funds. This gain, I can tell you, would definitely be over 20% if I had just invested in things like Vanguard's Growth S&P 500 ETF. So I got to say, starting out, it was not a good idea to just buy shares and whatever, because I didn't do too good of a job at it because I was just starting out. So my biggest recommendation is to start paper trading, especially if you're going to be trading options. Learn more about all that stuff and then get books. If you want, I could also make a video about books. I'll be posting that video on my Instagram or my Twitter. Both of those are at Wiser Dividends. I'm Kane, and you're watching Wiser Dividends.